All right. Well, welcome to this exciting announcement that we're making in partnership with ICBA. Um, uh, for an introduction, my name is Dan Marks. I've spent pretty much my entire career in the banking industry, and now I'm excited to lead growth solutions here at OptimaFI. And we'll talk a little bit more about uh, who OptimaFI is and what it means and how we got to this journey, but a little bit more about my background. I did a couple of stints as chief marketing officers for what is now First Horizon and Hancock Whitney. I've been with what is now Optima FI for over 6 years through a really exciting period of growth, helping banks just like yourself all over the country on the topic that we're talking about today. Personally, I've got a wife and two kids. We live in the greater Atlanta area, and we do have a couple of pets as well. One of my kids is starting college just shortly, so a lot of change in our household. But this is an exciting industry, and thank you for joining the webinar. Optima FI was created. The name was created to really communicate a couple of key things, and it ties directly to our mission. So, Optima is linked to the best or most effective outcome, and then FI, financial institutions, kind of a quicker way to say bank. But we stand for the pursuit of better insights, better outcomes, and better partnerships. And the reason for the brand is it is a new name, just like many banks have gone through this transition, but it represents coming together three fantastic companies and brands that have decades of experience in the industry. And so the earliest predecessor was QuickRate, and so you might know QuickRate from its long history with ICBA and the CD marketplace and CECL Analyzer and uh, Call Report Insights, all the great liquidity and analytics solutions. Infusion really was born in an interesting time to start a financial services company of any kind in 2007, born to really bring a level of focus and data to banks in what we're talking about today. So that's the predecessor company that I joined from Hancock Whitney. And over its time period, we've generated actually now over $30 billion of deposits and loans through the kinds of things that we're going to talk about today. And then, of course, IntelliCredit you may recognize from ICBA as well. And so those three companies came together about 2 years ago. And so just like with our experience with banking, we wanted to be very thoughtful in how those things came together. Um, and just how everything came together. And so the brand was a long time coming. The brand change was a long time coming, and very thoughtful, trying to make sure that it's a net positive for the community, which is one of the things that we're going to talk about today, is how we're bringing that together. And so those three companies directly translated into our three business units at Optima FI. Optima FI Growth, which is the old Infusion business, really delivers acquisition services, so helping banks acquire new to bank relationships, onboarding that comes right after that intensive focus, and then systematic growth through cross-sell and other techniques of expanding deposits, loans, and fee income. So it's tangible impacts on your balance sheet and P&L through data-driven targeted marketing. And we have a pretty unique billing structure, which we'll unpack more about. And then Optima FI balance sheet is the former QuickRate business, and Optima FI credit risk is the former IntelliCredit business. And so we're just excited, to be joining the stable as a ICBA preferred partner in for this session. A little bit more about the context for OptimaFI Growth, the old infusion business. We have data assets that span half of the U.S. households, and so really a nationwide breadth, all focused on helping community banks just like yourself. We've helped hundreds of banks over the years, and through targeted, tangible, data-driven marketing. Of course, that's changed a lot. Um, a decade or so ago, or even longer, if you wanted to reach a specific household, there was only one or two channels that really mattered. Now there's dozens of digital channels that we can be employed with, but the fundamental discipline of using data to identify an audience and then reach them very precisely is the foundation upon this is built. And we've generated, like I said, over $30 billion of balances using the process that we'll talk about a little bit more. And so if you, and really the fundamental premise of the offering is taking practical data to help you uncover growth opportunities and then monetize those. And so if you think about the typical analysis process that a bank might do at the top of the house, you're using a variety of public and private information to assess how you're doing versus peers on key financial metrics that relate to the balance sheet, the income statement, return on assets, return on equity, asset quality, efficiency ratio, and you're looking at how do you stack up with peers as an input to your strategic planning process. OptimaFI Growth uses a very similar approach strategically, but takes it down a level to a granular customer level view. And so because we have thousands of proprietary data assets that help banks understand how individual consumers and businesses all over the country interact with your balance sheet, buy your products and services. We have those statistics around things like account penetration, product mix, household performance, cross-sell numbers, accounts per product, share of wallet, growth rate, digital services penetration, payment rates. I can go on and on. But we apply that in a very systematic process to help understand versus your peer norm, from a norm perspective, where are your greatest pockets of growth opportunity and attrition risk to feed into a systematic strategic marketing plan. And so that process is built on two parts of the data asset. The behavioral macro picture is the one that has insight on 50 million households that I mentioned on how do people interact with all those product services. But then we have an equally extensive database that covers how do individual businesses and consumers respond to stimulus, marketing stimulus, i.e. messages delivered to specific segments with specific mixes of channels of communication, with specific offers and messages. And we're tracking how those perform and how those differ between peers. And so the combination of those data assets allow us to come to the table to give you a lot of insight on those growth opportunities, but then also precisely target and model pro forma what we can do for your bank. And so that's how it's the combination of these two data assets that allow us to offer our services on a pay per results or pay per performance perspective. We've started to talk a lot more about pay for results because there are marketing firms out there that talk about pay per performance in terms of a cost per click or a cost per lead. But when we're benchmarking performance and tracking performance, we're actually going all the way down to what businesses or consumers actually opened accounts that match back to that marketing stimulus. And so our view is just like in Moneyball, if we can help banks eliminate beliefs and bias with data, hard data on what are peer banks seeing in terms of all those key strategic metrics that I mentioned on the slide before, and then specific pro formas, we can help them gain a clear advantage against their competition, as also and deliver everything you do in terms of the heart for your local community, while tapping into some of the capabilities that may only be available at large banks in-house or with the resources available. And so that's really, we kind of think about bringing the Moneyball capability to the underdog community banks. I've a lot of history. The thing I love about community banks is they're really focused on the heart and soul of each local of your community, right? That's the whole name. And so if we can help you use data-driven techniques to accelerate your growth, that just makes you stronger and more effective in being able to grow and help those local communities thrive. The way we do this, and so if we're going to invest our money in your success by doing a bunch of activity up front and getting paid on the result, we have to be really smart on the analysis, right? And the way we start, there's really sort of two buckets of our process. One is using all the data that I've talked about to help you find your best growth opportunities. We do this through what's called a process called opportunity assessment. And so it's using a framework. It's about a 40-page assessment that we do very quickly using data you already have. But it's based on the fundamental premise that if we're going to help customers buy from us, so whether that's consumers or business, first of all, we need to think about what are the fundamental needs. So high depositors are what funds the balance sheet. Every bank has a different mix of high depositors, but every bank we've ever analyzed, over 90% of the funding on your balance sheet comes from high depositors. And so understanding what are those needs, what are those factors, you use those funds to lend out to those people who are actively borrowing from you, right? And so we do differentiate between, say, single service mortgage and active relationship borrowing. And then transactors are really what drives your fee income in a large measure. I mean, there's certainly wealth management services in some cases and those kind of things, but payment activity, both deposits and payments, is what drives either directly or indirectly a lot of the fee income, interchange, overdraft fees, treasury management fees, merchant services fees. A lot of the fee income comes from those transactors. And so the opportunity assessment is structured around helping understand what are those pockets of capacity and propensity for your customers to buy more of those services from you. And then awareness is the practical application of taking the data, creating targeted awareness against those services so they know that you offer it, you're top of mind. That increases the probability that they buy from you. And then we track it all the way to understand what actually happens. And so that's the framework we use in our approach. The opportunity assessment is a really rich, practical application. One of the things that bankers all the time tell me, and I saw this when I was a banker, is this is really practical, actionable, right? So some people could talk about the framework of high depositors, transactors, active borrowers. You may have even seen benchmarking along the way from providers that may have focused on one of those things. Your card processor may give you some insight about transactors. There's certainly providers that we could think about that focus on deposits and loans, but we pull it all together and think about it on a true relationship basis. And so at its most strategic level, we're helping you understand, what's the embedded growth potential. So for example, in this bank we're looking at, their all three penetration was 20% below peers. So they had an embedded growth opportunity of just getting up to peer average. They could improve the all three penetration in the center of the circle by 20%. But they had relative strength already in high depositors and transactors, and then a relative strength on transactor only there at the bottom. So understanding those elements are really key. And then we dig into deposit concentration. This is perhaps one of the most powerful sections of the analysis because we're helping you understand what are those tiers of deposit usage. In this case, it's a consumer view. Um, what are those tiers in deposit usage at the bank? You know, what percentage of the and this in this particular case, the banks had 3.5% of their households on that top row controlled 48.3% of deposits, right? That's a lot of concentration that represents both an attrition risk if those relationships leave, but also a tremendous growth opportunity when you consider that the average checking balance of the top tier is over $100,000. And then on average, the high deposit uh, household penetration or the average balance of checking accounts among high depositors is $42,000, right? So understanding how do we get more checking overall, but in particular, defending those high depositors and then growing checking, that can be a leveraged growth opportunity because for every one of those high deposit households that you convert to checking, you're generating $42,000 of low cost deposits and that sticky primary relationship. So this is an example of very actionable data. We also drill into specific product level analysis across the balance sheet. And there's several other views of the data. This is just a sampling of a 40-page analysis. We go deep into single service. We go deep into new households, market comparisons, high depositors, total households, businesses, and business and consumer view of those. But then, so all that analysis, it really builds to specific recommendations that we are making on what are your growth opportunities. And one of the key assumptions we're making is that you're building a discipline, and we can help with this. This is one of the services we offer of building a discipline of using data to identify opportunities, feeds directly into planning, executing on those opportunities, tracking the results, and then refining based on learnings, and then not just learnings from your bank, but learnings from across the industry through that peer benchmarking. And so, to give you a taste of what that planning process looks like, um, we'll develop a very granular, specific, recommended omni-channel marketing outreach calendar for you based on your actual data. And so, each one of these target household counts will be based on the specific segments of information of households or businesses at your bank that represent those high capacity and propensity for specific product needs. So whether that's checking or debit card or business checking, deposits, lending, that we can go out and specifically reach. This is a cross-sell example. We do the same kind of process for new to bank acquisition of identifying specific segments that have that high capacity and propensity. Married up with that plan is a specific pro forma where we model based on the experience of working with so many peer institutions all over the country. What do we expect on average to generate based on your data compared to the peers? And what is the average balance that those are going to deliver? So that drives a total balance estimate over a year program. We also estimate the halo balance. That's something that's not, so for example, on that top line, we're calculating a checking cross sell, but then when you drive traffic in to buy checking, some portion of those people are going to buy other things from your salespeople or your website. So halo represents the other things bought that are by the responders that aren't promoted. So it's sort of a lagniappe, as they would say, something a little extra. But then we model what is the specific spread and fee impact, so contribution, and we can use your actual data if you have it on what your opportunity rate is. But the whole idea is there's a spread impact value from deposits. There's of course a interest income benefit minus cost of funds. for loans. And so we're looking at that contribution and impact, which is spread in fees compared to the cost. And so, these in these examples, we're modeling an opportunity for this bank that, from a cross-sell perspective, is basically over 6 to 1 when you consider that the ROI looks at the cost compared to the benefit. So over $6 of revenue for $1 of cost, or 558% ROI in the first year, growing even beyond that on a 36-month basis. And so that kind of payback and so it also equates to a payback in 1 quarter. So the revenue benefit, or the contribution impact, the pre-tax benefit and this is very common for what we see. And so the reason we can generate these pro formas with such precision is because we're doing hundreds of these campaigns for your peers, and testing countless different combinations of all those variables and feeding into this process. So we can be very predictive on what we can do for you. And then the pay for results aspect comes in, and there's some variability here. But part of our analysis is we'll give you a specific pro forma to say, if you wanted to execute these programs, if you wanted our help to execute these programs, we would charge you, we wouldn't charge anything up front. We would charge per account generated as part of this program. And so there's a couple of flavors of that. There's a flavor that it's just a straight pay per account, and then there's also a structure that allows you to manage some budget through a cap. And so you can cap your total marketing expense through that process. And so the pay per results program is all about applying this data to help you reach goals and objectives with a very precise market. And then we essentially give you guaranteed ROI, because if we can't generate the accounts, you pay less. And if we do generate the accounts, you know exactly what your cost per account is up front. We have one client who for a number of years said, one of the things I love about you guys is, for everybody else, I do some marketing activity, and I know what I pay up front, but I have no idea what the results are. With you, I know on the upfront exactly what I'm paying for results. And so that certainty of it is one of those. That certainty of ROI is what he really loves, and it's enabled by all the data and analysis and experience we have with peers. A couple of examples of how this actually plays out in real life. So in one case, this is a deposit growth case study. We worked with a $6 billion bank. They had a specific need to boost low-cost deposits. And so we modeled actually $250 million of benefit through that pro forma process. And in the first year, we actually over-delivered. We delivered about $496 million of deposits, so almost twice the deposits. They did use the capped process. So not only did they have a fixed CPA, but that CPA actually got even smaller because of the cap structure. And the NIM benefit. Now they did end up being a little bit more aggressive than they planned to on pricing, and we advised every one of our clients on what is the intersection on when you're setting pricing on deposit on CDs or money market. What are the different volumes that you can get for that? But in this case, the $4.5 million of NIM benefit. So the pricing was favorable to their cost of funds benchmark by almost 1% on a blended basis for those deposits, and 74% of those were new money. So this is a great example, and actually more common than not on our modeling tends to be conservative, because again, we're putting our money at work, and we want to make sure that we're setting both of us up for success. The approach is pretty similar for new to bank. Um, Here, a $4 billion bank wanted to boost new customers. They had actually been in a declining new household trend. Their overall customer base was declining year over year. In the first year, we worked with them on a systematic new to bank acquisition program that they actually increased new to bank total households by 27% after declining, at even better retention rate for those new households. And just acquisition is one of those long games where it takes discipline optimization. And in this case, the first year we worked with this, they had a blended average cost per acquisition of 271, and then that got even better in year two as we were able to bring more data to bear and drive that even further and outperform our results. And so that cost got even better at 223 in year two. And so just to kind of continue that Moneyball theme that I talked about before, banking is a game of inches. And so just like baseball, making small tweaks in your improvement, but that are sustained on a daily basis, can really add up to changing the trajectory of your bank. And so that's what we specialize in. We specialize in letting the data and the experience of people who've spent decades in the industry working with you, extending marketing teams. I haven't yet met a marketing team that thinks they have enough people or enough hours in the day. And so we specialized in coming alongside community bank marketing teams and really extending them to give them the capability to increase your batting average. And we do that on the pay for results basis where we're putting our money at work. And so when you think about how that works, just to kind of summarize the process I've walked through, we take in your bank's data, we do a custom benchmark analysis. That's the opportunity assessment that I gave you a taste of on this presentation. We deliver that to you in an on-site presentation that ends up being a very valuable strategic conversation for helping you think about what does the data show from growth from an opportunities and risk perspective, and with specific recommendations. That, of course, is an input to your planning process. Management teams take that, usually have additional internal discussions to say, how do we use this in terms of planning, come back and ask for refinements based on their priorities to the presentations and recommendations. But we, because you guys are ICBA members, we're offering to do that opportunity assessment for you on a complimentary basis. So it's really a great value exchange with us bringing to bear some of the analysis. We want to get to know you better to understand, how could we profitably help you. But then part of that is we're giving you the value of that benchmark on a complimentary basis. It does require a little bit of work. You got to pull some files. You probably already have the files that we need because we work with so many banks. But then if you do want to go forward, the execution is led by a strategist who has been a chief marketing officer at a bank, a full team backing him up. And so we set the whole process up to rapidly get you into market with the specific programs that you want to go forward to, that are pro forma, up front exactly what the expected outcome is, up front exactly how we will get paid if we're successful, and how we won't get paid if we're unsuccessful. And then we just streamline everything as much as possible, working with whatever data and technology you already have in place. And so we'd really designed this presentation to be a quick overview of this exciting new offering that we're bringing to you through the ICBA process. We'd love to talk to you more about that complimentary opportunity assessment. it's a pretty quick process. We can walk you through more detail what it looks like and what it involves, but it's a very powerful process for you to get that outside perspective on what your growth opportunities are, and know that if you need some help monetizing those opportunities, we work on a pay per result, pay per account basis, which really helps put our money at put our money where our mouth is, and form the basis of a true partnership. So we do have time in this presentation for questions, if you guys have any thoughts right now. Are there any questions, Jen?
No, no questions at this time. I did want to mention if anybody's interested in the opportunity assessment, they can also send in a chat through the chat feature. We'll be happy to reach out.
Yeah. All right. Well, so our emails are there. You'll get a copy of the presentation, and as a follow-up, and we would love to talk to you more about this opportunity assessment to help you identify those opportunities, uh, and get a real powerful picture on where you could accelerate, where you could mitigate some growth risks. Thank you for your time.
Thank you, Dan.